See, this problem is there in study material, illustration number 23. Question number 8, page number 14, study material, question number 23. Of course, old study material. New study material I do not know. The names of the companies we have changed from Rock, King and Chair as Good, Best, Better and Good. Okay. Now, if you take up the problem for discussion, only 3 adjustments that we have. The last adjustment, proposed dividend, we will simply ignore. The background that you have, proposed dividend is not an adjusting event, therefore we will simply ignore that by putting a note. It is a problem where Better Limited acquired in Good Limited 6,800 shares very long time back. So when we just note down as cutoff, best in, better, best in, parent is not having any interest in sub-subsidiary. Better in, good. Date of acquisition 2008, and here also 2008, lot number 1, lot number 2, (2009). Date of consolidation 30th of June 11. Percentage of holding, say actually say lot number 1, lot number 2 only in best and better. In this case only one acquisition only, correct? Percentage of holding 6,800 upon 8,000, 85%. Here lot 1 purchases 8,000 upon 15,000, 53 and 1/3%, more than 50%. In first lot itself they have acquired the controlling interest. Lot number 2, 4,000 shares upon 15,000 works out to 26 and 2/3%. Both put together comes to 80%. So minority interest 20% and 15%. This is what you understand as far as their basic holding is concerned. Then let us just take up classification. Firstly, the last company, Good Limited, we will take up. There is no pre-acquisition dividend. You have capital reserve. Capital reserve 23,000. As on the date of acquisition, they had capital reserve 15,000, and after acquisition 8,000. This is capital profit, this is capital reserve. This will not be referred to as revenue reserve because the title of this reserve itself is capital in nature. So, had it being general reserve, this increase we would have taken up as revenue reserve. Since the title of the reserve itself is capital reserve, increase since acquisition will continue to be referred to as capital reserve. The one that existed at the time of controlling acquisition, we will put it out as capital profit. Then revenue reserve. Revenue reserve 45,060 on the date of acquisition and after acquisition. 30,500. 14,560. This is capital profit. This being revenue reserve. Please just check up the total.
Yes, sir.
Is that balancing figure correct? 14,560. So now we will take up on to better. 2 times you have to do, one for lot number 1, the other one for lot number 2. And fortunately we don't have capital reserve in this particular company. You have only revenue reserve. There is no capital reserve there. 49,370. Revenue reserve 49,370. 49,370. Date of acquisition and after acquisition. So on the date of acquisition, for the first lot, when they bought, it was 40,000 and 9,370 after acquisition. Capital profit, revenue reserve. This is for lot number 1. For lot number 2, revenue reserve 49,370. That should be classified in a different date of acquisition. When the second lot was purchased, the amount of capital reserve was 45,000. 4,370 balancing figure. Capital profit, revenue reserve. So adjustment number 3 we will simply ignore, or in fact we are not supposed to include, because they have already accounted. So we have got to deduct like debtors and creditors. That is what we have got to do. Are you understanding? There is no stock reserve. So now we will take up better in good. Single acquisition only. DOA, DOC, CR and RR. Equity share capital, capital reserve, revenue reserve. $80,000, 23,000, 45,060. 80,000, 15,000, then 30,500 dash dash 8,000 dash dash 14,560. $125,500. 148,060. 8,000. 14,560. Percentage of holding 80-20, 85, yeah. Net worth 125,500 into 0.85. 106,675. 148,060 into 0.15. 22,209. 8,000 to 0.85. 6,800. 14,560 into 0.85. 12,376. Net worth, that is investments. Investments by better. Investments by better. 1,50,000, but they have said 6,800 into 22. 6,800 into 140? 9,600. This results in goodwill. So please be careful. Don't take up entire 1,50,000 and they are giving you the breakup. 149,600 minus 106,675. 42,925. Carry forward 42,925, 22,209 dash dash. Then transfer the share of capital reserve and revenue reserve to better under indirect method. 6,800, 12,376. Is it okay? Now it is best in better. Here we will put it out as DOA1, DOA2, DOC, capital reserve and revenue reserve. So here we will put it out as capital reserve 1, capital reserve 2, RR1 and RR2.
Capital profit.
Wait, whatever I am just telling, it is all correct only, because you are taking 6,800. Equity share capital, revenue reserve, share of capital reserve, share of revenue reserve. Firstly, we will update DOC. $60,000. I'm sorry. 1,50,000. 49,370. 6,800. 12,376. 1,50,000. 1,50,000. RR 40,000. 40,000. 40,000. 45,000. Am I right? 40,000 and 45,000. Dash 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 dash. $9,370, 4,370, 12,376, 12,376. Here 6,800, 6,800. Two and 8, 546, 6,800, 6,800, 9,370 plus 12,376. 9,370 plus 12,376. 21,746, 4,370 plus 12,376. 16,746. Percentage of holding 53 and 1 by 3 percentage. Next one 26 and 2 by 3, 20. 53 and 1 by 3, 26 and 2 by 3, 53 and 1 by 3, 26 and 2 by 3 percentage. Net worth 1,90,000 into 0.533333. 101, 333, 1,95,000 into 4 divided by 15, 52,000. Is that right? 218, 546 into 0.2, 43709, 6,800 into 8 divided by 15, 3627, 6,800 into 4 divided by 15, 1813, 21746 into 8 divided by 15, 11598, 16,746 into 4 divided by 15, that should give you 4466. So 153, 333, 5440, 11598 plus 4466, 16064. Investments 1,60,000. There is no other investment held by best. So 1,60,000 entirely. This would result in a goodwill of 6,667. Brought forward from the previous one, 42925 goodwill. 42925. Minority interest 22,209. 22,209. Then SFS, there is no goodwill there. You have capital reserve 50,000, revenue reserve 99,540. So CFS figure goodwill 49,592. 65,918, 55,440, 115,604, 171,044. So these are the three numbers we have to check up with the institute study material. Reserves and surplus 171,044. Minority interest 65,918. 65,918. Then goodwill 49,592. They are very lucky to have our answer. Okay. Thank you.